Good morning, ladies and gentlemen. I am Marcus James, AFS's chairman, and I take great pleasure in welcoming you to our 2021 annual general meeting. I trust that you're in good health and hope that you continue to remain safe during these challenging times. The meeting is now called to order. Seated at the head table are Mr. Frederick Williams, our Group CEO, Mr. Brian Salmon, our Financial Controller, Mr. Rohan Chopra from our external auditors, KPMG, and Ms. Sherry Murray, our Company Secretary. I will now ask Sherry to advise if a quorum is present.
Yes, Chairman. I confirm that there's a quorum present in accordance with the articles of the company.
Thank you, Sherry. We received an opening prayer from Mr. Staple that will be delivered by Evita McLaren, our Sales and Marketing Manager. Evita, please lead us in prayer.
Morning, everyone. Let us pray. Creator God, we thank you for taking us all safely to this AGM today. We thank you for the many blessings you have bestowed on us as a company and shareholders over the last year. There have been many challenges, but you have guided and guarded us. As the good shepherd who left the 99 to find the lost sheep, when he found it, he brought it home and celebrated with everyone. So despite the challenges of COVID-19, we are here today to discuss the affairs of our company. We invite you, Lord, in our midst and ask you to guide us in thoughts and words as we go through our affairs. Help us to respect each other's opinion and show love to each other. Bless our chairman, our CEO, and the board of directors and members of all committees and our hardworking employees and shareholders. Lord, take us home safely from this meeting and may you continue to bless us. Amen.
Thank you, Devita, and thank you, Mr. Staple. Shareholders, this year is unlike our typical face-to-face AGMs in that it is being held virtually. This virtual arrangement is due to the impact of COVID-19 and the resultant mandatory restrictions placed on public gatherings by the government of Jamaica in an effort to contain the virus. In order to facilitate the virtual delivery of our AGM, Access Financial Services applied to the Supreme Court of Jamaica and obtained an order on May 31st, 2021 to hold our AGM by hybrid or virtual means. Notices and advisories regarding the format of the AGM were mailed directly to you and posted on the company's and GSE websites. Advisories were also placed in the Jamaica Observer and the Gleaner newspapers. I'm extremely pleased that you have taken the time out to join today's proceedings. Pursuant to our application on May 31st, Access received a court order to hold a virtual AGM. As required, the notice of AGM was placed on the company's website, the website of the Jamaica Stock Exchange, and was sent via mail to all shareholders. The AGM notice is also available on our annual report on both the company's website and that of the Jamaica Stock Exchange. Having met these requirements, the AGM notice shall be taken as read. At this juncture, I invite our company secretary to walk us through the protocol for today's meeting.
Thank you, Chairman. Good morning, ladies and gentlemen. For today's proceedings, we ask that you adhere to the following protocols. We thank those of you who submitted questions prior to the meeting. During the meeting, your microphones will be muted. However, we invite you to submit any additional questions that you may have via email to agm@accessfinanceonline.com. We encourage you to identify yourself by submitting your name along with your questions. After the presentation by the Chief Executive Officer, Mr. Frederick Williams, we have allotted half an hour for the question and answer session. Every effort will be made to respond to questions received in this time. However, the response to any question which cannot be accommodated will be posted to our website. A recording of the AGM will also be uploaded to the website. In your shareholder letter, you are asked to vote for each resolution by completing a proxy form and submitting these to the JCSD prior to the meeting. We thank those of you who submitted your votes. If you experience any technical challenges during the meeting, we encourage you to call our technical team at 876-434-0989 or 876-284-2483. We thank you in advance for complying with these protocols, and we look forward to a successful meeting. I now hand you back to our Executive Chairman, Mr. Marcus James.
Thank you, Sherry. I take great pleasure in introducing our dedicated board of directors, who are all joining us virtually today. Our independent directors joining us online are Mr. James Morrison, Chairman of our Audit and Risk Management and Corporate Governance Committees, Ms. Justine Collins, Member of our Human Resource and Compensation Committee, and Mr. Michael Shaw, Member of our Audit and Risk Management and Human Resource and Compensation Committees. Our non-independent directors who have joined us are Mr. Christopher Williams, Member of our Human Resource and Compensation Committee, Mr. Neville James, Member of our Corporate Governance Committee, and Ms. Charmaine Boyd Walker, Member of our Audit and Risk Management and Corporate Governance Committee. Having recently assumed the chairmanship of the Board of Directors, I would like to thank Mr. Christopher Williams for his stewardship of the board for the financial year ended March 31st, 2021. In September 2020, Access Financial Services celebrated its 20th year of operation. Since the company began, I have served in many roles, and I'm now thrilled to assume the role of Executive Chairman. I would like to thank the current and former members of the board for their contribution to the development of the company over the years. I would also like to thank Mr. Frederick Williams, our CEO, for his stewardship of the company since taking over as Group CEO earlier this year. As we look forward to the future, our mission of providing financial services to micro-entrepreneurs and individuals underserved by traditional financial institutions remains the same. We will continue to provide financial solutions to our customers to improve their financial well-being. To commemorate our 20th anniversary, we launched a scholarship program with the beneficiaries being children of our loyal customers. A total of $800,000 was awarded to the first cohort of students from primary to tertiary level institutions. We received numerous applications and had a difficult time deciding on the final awardees. This initiative will be continued as one of our ways to give back to our customers and their families. 2021 financial year commenced with our business continuity plan activated and the implementation of risk management strategies designed to minimize the impact of the global pandemic COVID-19 on the company's operations. These included the establishment of COVID-19 safety protocols to protect team members and customers, the strengthening of the company's risk management framework to mitigate credit and liquidity risks, the implementation of online loan applications, submissions via our websites, the expansion of direct-to-bank deposit for loan disbursements, the implementation of remote work arrangement policy to allow team members to work remotely and create flexible work plans, and the change of operations at Embassy Loans to process all loan applications through electronic mediums. Adherence to the COVID-19 best practice safety protocols and the change in technology provided the opportunity for us to fast track some of our medium-term technology strategic priorities to serve our customers more conveniently, operate more agile and efficiently, and importantly, it has pushed our team members to remain productive while adapting to new workplace norms, including remote work. I would like to thank you, our shareholders, for the continued confidence in our company, our customers for their unwavering support and loyalty, and our hardworking Access team members here in Jamaica and in Florida for their dedication and resilience. The past year has been unprecedented, but despite the challenges, the Access team stepped up to the table and delivered a commendable financial performance. At this point, our CEO, Frederick Williams, will make a presentation on the company's performance for the financial year ended March 31st, 2021.
It gives me great pleasure to share with you the performance of our company over the past year and a snapshot of the June 2021 first quarter results. Before I begin, please allow me to introduce the senior leadership team of the company, starting with Catherine Thomas, Manager, Operations and Credit, Davita McLaren, Manager, Sales and Marketing, Hugh Campbell, Manager, Collections and Internal Controls, Keisha Smith, Manager, Human Resources and Training, Brian Salmon, Financial Controller, and Michael Burke, Manager, Information Technology. I also want to extend a special welcome to our team from Embassy Loans in Florida, led by Alan Wench, Chief Operating Officer, and Sandra Fajardo, our General Manager. As the chairman indicated, during the 2021 financial year and continuing to this financial year, the company is taking all the steps to implement risk management strategies designed to minimize the impact of COVID-19 on our team members and customers. For us as management, it is our daily task to see to the health and safety of our team members, to ensure that they are safe, productive, and motivated during the myriad of physical, mental, and health challenges brought about by the pandemic. The financial results for the year ended March 31, 2021, therefore must be considered in the context of the group operating under extraordinary circumstances given the impact of COVID-19 on the economies of Jamaica and the United States. Consolidated revenues for the group was $1.8 billion, which was lower than the prior year by 16%, as the group experienced a reduction in the demand for loans. Disbursements for Access declined significantly during April to June 2020, which was in the early stages of the pandemic. We have since seen steady improvements in keeping with changes in the government's COVID-19 protocols during each wave of the pandemic. Embassy Loans in Florida also recorded lower disbursements as the stimulus packages granted by the United States government resulted in lower demand from our customer segment. Again, this has improved given that a number of these provisions have now expired. For the year under review, total operating expenses amounted to $1.5 billion, a decrease of $281 million or 16% when compared to the prior year, due mainly to cost containment measures implemented to offset the reduction in operating revenues. Staff costs decreased as we implemented the Access branch network optimization program, which reduced our footprint from 24 branches to 18 branches across the island. Allowance for credit losses remained relatively flat year over year, despite the economic impact of COVID-19 as various delinquency management strategies were implemented during the year to maintain the credit quality of the portfolio. Our customers, particularly those who operate in the business and services sectors, were severely impacted by the pandemic and the resultant restrictions implemented to contain the spread of the virus. In order to alleviate some of their financial burdens, we granted deferred loan payment waivers and reduced interest rates and fees where possible. Consolidated net profit after tax for the year was $266 million, or 19% less than the prior year's amount of $330 million. This resulted in earnings per share of 97 cents and a dividend payout ratio of 44%. Total assets as at March 31st, 2021 was $5.5 billion, of which loans and advances of $4.1 billion represented 74%. We have commenced the new financial year with consolidated net profit after tax of $89 million for the 3 months ended June 30, 2021. These results reflect an improvement in the operating environment year over year as economic activity continues to increase. Earnings per share was 33 cents with a dividend payout ratio of 31%. As at June 30, 2021, the group's asset base stood at $5.4 billion and loans and advances $4.2 billion, an increase of 3% year over year and 2% since the last year end based on the improvement in disbursements. A key strategic objective for us was implementation of our digital strategy, which was necessary to respond to the changing environment and resultant change in customer behavior. The implementation of the strategy has seen us over the past year accelerate the use of digital modalities to conveniently disburse loans to customers and enhance the efficiency of our communication and digital marketing activities. Customers have the ability to apply for loans using our websites and have loan proceeds sent directly to their bank accounts, minimizing the need for in-branch interaction. We will continue to seek ways to leverage technology to enhance customer experience and reduce loan turnaround times. Given the increase in online activities and mobile data traffic, our information technology infrastructure has also been bolstered to improve the level of security across our network. From the onset of the COVID-19 pandemic in March 2020, our team members have shown exemplary levels of resilience as they were unwavering in support of our customers. Once the COVID-19 safety protocols were enacted, we implemented a remote work arrangement policy to mitigate the risk of team members contracting the virus. This shift disrupted the way team members worked, as they were required to alternate between working from home and coming into office. To support this transition, our management team provided training for all team members on how to maintain a strong working relationship, continued productivity, and how to effectively manage remote employees. We also invested in technology to ensure that team members had the tools to work effectively from home and that connectivity to the core operating system was secure and seamless. Despite the uncertainty resulting from the pandemic, our team took on these challenges and the changes that we implemented without hesitation. Over the years, we have remained consistent in building relationships with and investing in our team members through training and development. This has manifested in our most recent staff satisfaction survey results, which shows a 16% increase in the number of team members that are happy working at Access. In closing, I would like to reaffirm the Access team's commitment to demonstrate even greater resilience as we continue to manage the impact of the COVID-19 pandemic. We will be steadfast in executing our strategic priorities, which includes increasing the use of technology for non-branch channels, leveraging technology to improve customer service and operational efficiency, increasing focus on compliance and risk management as we become regulated under the Microcredit Act 2021, and the introduction of new products and services to meet the financial needs of our target market. Thank you. I will now hand you back to our Executive Chairman, Marcus James.
Thank you, Freddie. I will now ask Sherry to facilitate the question and answer section of today's proceedings.
Thank you, Chairman. As mentioned earlier, shareholders were asked to submit questions via email. We received the following questions from Mr. Orette Staples. Question number 1. Referring to page 53, why was there this very high level of judgment increasing our credit risk? I will ask Mr. Chopra from KPMG to respond.
Yeah. The company's business is to provide loans. If amounts are not collected within the scheduled time, it exposes the company to losses. The applicable standard, IFRS 9, requires an assessment for expected credit losses. The determination of these losses are driven by various assumptions, including but not limited to assessing the ability of the customers to repay the outstanding obligations when they became due, as well as an analysis of changes in the macroeconomic factors that may impact their ability to pay these obligations going forward. The macroeconomic factors that are considered include the forecasted unemployment rate, inflation rate, and GDP growth rate. Given the impact of the current pandemic, COVID-19, the credit risk of most customers have increased as there has been a significant downturn in all sectors of the economy, and this downturn is expected to continue in the short term. The significant judgment would be around 1, the subjective nature in determining the customer's ability to repay the obligations, and 2, the selection of appropriate forward-looking information, forecasted macroeconomic factors to apply, and the level of future delinquency as a result of the uncertainties of the economic impact of COVID-19. Thank you.
Thank you, Mr. Chopra. On page 42, the amount of $3.6 billion, or 79.1%, was over 12 months past due as at the 31st of March, 2021. What measures have we implemented to collect this past due amount? I ask Brian Salmon to respond.
Table on page 42 refers to the maturity profile of the loans and advances portfolio. The amount of $3.6 billion represents amounts that becomes due after 12 months from the reporting date. The aging of the portfolio on page 103 shows that $3.4 billion, or 82% of the portfolio, is current. The collections team have implemented various strategies to collect past due amounts, such as the use of frequent text messages, engaging bailiff services with good track record, and also having a very good collection team. The collection team have implemented various strategies, and these have yielded good results.
Thank you, Brian. On page 45, the earnings per share was reduced from 97 cents, to 97 cents from $1.20. How do you plan to have this per share return to its level of $2.59 as it was in 2017? I'll ask Frederick to respond to that question.
Thank you for that question, Mr. Staple. As indicated, our financial performance for 2021 must be considered against the backdrop of the impact of COVID-19. As the spread of the virus is brought under greater control and economic activity can be stabilized, we expect our profitability to improve. Please note, however, that the core of our strategic plan is based on making significant investments in technology to improve our business. This will allow us to use technology to grow our customer base, introduce new products, and increase loan volumes without expanding our physical footprint, and also make our operations more efficient. This will therefore result in positive operating leverage, where we will see our revenues growing much faster than our expenses, and ultimately increase earnings per share and dividends to the shareholders.
Thank you, Frederick. The fourth question. On page 65, in what ways are we using the bundle of rights approach to assets in order to improve our financial position at our company? I'll ask the financial controller, Brian Salmon, to respond.
The bundle of rights approach is really a reporting requirement, and we are currently using the bundle of rights approach to recognize right of use assets on our balance sheet.
Thank you, Brian. And the last question that we received was on page 98. What accounted for the tax adjustment of $3.4 million in 2021? And what constituted this, thus $13.4 million disallowed expenses? I'll ask Brian to respond.
This tax adjustment of $3.4 million represents an under-provision based on the prior year estimated tax returns that was filed. And the disallowed expense of $13.4 million relates to deferred tax adjustments on leases, interest receivable, unrealized gain on losses, accrued vacation leave, and interest payable.
Thank you, Brian. Have we received any further questions during the meeting? Are we going to just post those answers, or do you? Yes? Okay. The questions received during the meeting, the answers will be posted on the website. I now hand you back to our Executive Chairman, Mr. Marcus James.
Thank you, Sherry. I will now invite our auditor, Mr. Rohan Chopra from KPMG, to present the auditor's report, which was previously circulated to all shareholders.
Good morning. Independent Auditor's Report to the members of Access Financial Services Limited. Report on the audit of the financial statements. Opinion. We have audited the separate financial statements of Access Financial Services Limited, the company, and the consolidated financial statements of the company and its subsidiary, the group, set out on pages 59 to 115, which comprise the group and company's statement of financial position as at March 31, 2021, the group and company's statement of profit and loss, profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising significant accounting policies and other explanatory information. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the group and the company as at March 31, 2021, and of the groups and company's financial performance and cash flows for the year then ended in accordance with International Financial Reporting Standards, IFRS, and the Jamaican Companies Act. Basis for opinion. We conducted our audit in accordance with International Standards on Auditing, ISAs. Our responsibility under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our report, We are independent of the company in accordance with the International Ethics Standard Board for Accountants, International Code of Ethics for Professional Accountants, including international standards, IESBA code, and we have fulfilled our other ethical responsibilities in accordance with the IESBA code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters. Key audit matters are those matters that in our professional judgment were of most significance in our audit of the financial statements of the current period. These matters were addressed in the context of our audit of the financial statements as a whole and in forming our opinion thereon, and we do not provide a separate opinion on these matters. Measurement of expected credit losses. Key audit matter. IFRS 9 financial instruments is complex and requires the group to recognize expected credit losses, ECL, on financial assets. The determination of ECL is highly subjective and requires management to make significant judgment and estimates, particularly regarding significant increase in credit risk and forward-looking information. The identification of significant increase in credit risk is a key area of judgment, as the criteria determine whether a 12-month or lifetime loss allowance is recorded in respect of a financial asset. Forward-looking information reflects a range of possible future economic conditions in measuring expected credit losses. Significant measurement judgment is used in determining the economic scenarios, the probability weightings, and management overlay. These estimates involved increased judgment as a result of the economic impacts of COVID-19 on the group's financial assets. Management considered the following: qualitative factors that create COVID-19 related changes to significant increase in credit risk, increased uncertainty about potential future economic scenarios and their impact on credit losses. We therefore determined that the estimates of impairment in respect of investments and loans have a high degree of estimation and uncertainty. See notes 7 and 24A of the financial statements. How the matter was addressed in our audit. We performed the following procedures: obtained an understanding of the model used by management for the calculation of expected credit losses on investments and loans, tested the completeness and accuracy of the data used in the models to the underlying accounting records on a sample basis, involved our financial risk modeling specialist to evaluate the appropriateness of the group's impairment methodologies, including the criteria used for determining significant increase in credit risk, and independently assess the assumptions for probabilities of default, loss given default, and exposure at default. Involved a financial risk modeling specialist to evaluate the appropriateness of the group's methodology for determining forward-looking information and management overlay. Assess the adequacy of the disclosures of the key assumptions and judgments. Other information. Management is responsible for the other information. The other information comprises the information included in the annual report, but does not include the financial statements and our auditor's report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the financial statements. Management is responsible for the preparation of financial statements that give a true and fair view in accordance with IFRS and the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the company's ability to continue as a going concern, disclosing as applicable matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the company or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group's financial reporting process. Auditors' responsibility for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. A further description of our responsibilities for the audit of the financial statements is included in the appendix to this auditor's report. The description, which is located at pages 57 to 58, forms part of our auditor's report. Report on additional matters as required by the Jamaican Companies Act. We have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records, and the financial statements which are in agreement therewith give the information required by the Jamaican Companies Act in the manner required. The engagement partner on the audit resulting in this independent auditor's report is Nissa Johnson. KPMG Chartered Accountants, Kingston, Jamaica, June 10, 2021. Appendix to the report on the audit of the financial statements. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatements of the financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the financial statements, including the disclosures, and whether the financial statements represent the underlying transactions and events in a manner that achieves fair presentation. Obtain sufficient appropriate evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence and communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and where applicable related safeguards. From the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulations precludes public disclosure about the matter or when in extremely rare circumstances we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Thank you.
Thank you very much, Rohan. I will now ask Sherry to take us through the resolutions for this year's AGM, which was previously circulated to all shareholders.
Thank you, Chairman. As mentioned earlier, you were asked to vote for the resolutions which were put forward in the notice of the annual general meeting by completing a proxy form and submitting these to the JCSD. These votes have already been tallied. Resolution number 1, to adopt the reports of the auditors and directors and the audited financial statements of the company for the year ending 31st of March, 2021. May we have a motion that the reports of the directors and auditors and the audited financial statements of the company for the year ended 31st of March, 2021 be hereby adopted. The first resolution has been moved by Terry Ann Bisnott. May we have someone to second it?
I, Nicholas Mundell, second that motion.
It has been seconded by Nicholas Mondell. The registrar has advised that 100% of the votes received by proxy were in favor of this resolution. I declare the motion carried. Resolution number 2, to declare the interim dividend paid during the year as final. On the recommendation of the directors, the interim dividends paid by the company on August 28th and November 27th, 2020, and February 19th, 2021, be and are hereby declared as final for the 2021 financial year. May we have a motion for resolution number 2? The resolution has been moved by Terry Ann Bisnott. May we have someone to second it?
I, Nicholas Mundell, second that motion.
It has been seconded by Nicholas Mondell. The registrar has advised that all the votes received were in favor of the resolution. I declare the motion carried. Resolution number 3, re-election of a director. Mr. Neville James and James Morrison are the directors to retire by rotation pursuant to Article 97 of the company's Articles of Incorporation. Mr. Neville James, who is a shareholder director appointed by Spring Hill Holdings Limited pursuant to Article 99 of the company's articles, has been duly reappointed by the said shareholder. May we have a motion that Mr. James Morrison, a director retiring by rotation, be re-elected a director of the company? The resolution has been moved by Terry Ann Bisnott and has been seconded by Nicholas Mondell. The registrar has advised that all the votes received by proxy were in favor of the resolution. I declare the motion carried. Resolution number 4, to reappoint the retiring auditors. The resolution reads that KPMG, Chartered Accountant of 6 Duke Street, Kingston, having consented to continue as auditors of the company, be reappointed as the company's auditors until the conclusion of the next annual general meeting of the company, and that the directors be authorized to fix their remuneration. May we have a motion for Resolution 4? The resolution has been moved by Terry Ann Bisnott. May we have someone to second it?
Nicholas Mondell will second the motion.
It has been seconded by Nicholas Mondell. The registrar has advised that all of the votes received were in favor of this resolution. I therefore declare the motion carried. Resolution number 5, to approve the remuneration of directors. That the amount shown in the audited financial statements of the company for the year ended 31st of March 2021 as remuneration paid to the directors for their services as directors be and is hereby approved. May we have a motion for Resolution 5? The resolution has been moved by Terry Ann Bisnott
Nicholas Mondell will second the motion.
and has been seconded by Nicholas Mondell. The registrar has advised that all of the votes received by proxy were in favor of the resolution. I declare the motion carried. Resolution number 6 deals with special business. Given the exceptional circumstances imposed by the COVID-19 pandemic, the directors are recommending to shareholders that the articles of the company be amended to allow for virtual or hybrid meetings and to allow for notices to be served to shareholders by electronic means. The directors are also proposing that the maximum number of directors be increased from 7 to 11. These amendments are detailed in resolution number 6, and I will take them as read. Resolution number 6 is to amend the Articles of Incorporation by special resolution. And it reads that the Articles of Incorporation of the company be and are hereby amended by inserting a new definition in Article 1 after the word electronic, by amending Articles 6A, 54, and 79, and by adding new articles 53A and 54A. May we have a motion for resolution number 6? The resolution has been moved by Terry Ann Bisnott and has been seconded by Nicholas Mondell. The registrar has advised that 100% of the votes received were in favor of the resolution. I therefore declare the motion carried. I now hand back to our Executive Chairman, Mr. Marcus James.
Thank you, Sherry. Ladies and gentlemen, on behalf of the Board of Directors, I would like to thank you for attending and participating in today's meeting. A special thank you to the team from Affinity and the AFS IT team who made the virtual delivery of our AGM possible. I'd also like to thank the Jamaica Stock Exchange, our auditors, KPMG, and all our hardworking Access and Embassy team members. As we continue to navigate the economic and social impact of the COVID-19 pandemic on our business and economy, I want to reassure you, our shareholders, that the AFS team and the embassy team will work continuously to increase the value of your investment in the company. I wish for you and your families good health and hope that you keep safe. Thank you.